Greetings, members, one and all of the Salivation Nation. JP Morgan's latest prediction could send gold and silver prices plummeting. Let's explore. We all know JP Morgan's history, and this is something that could have a dramatic effect on gold and silver prices if this prediction comes true. And this is from Reuters, but we're going to reference a story here on CNN of all places. Yes, indeed. Maybe we'll kind of take a look at the difference between how CNN reports it and Reuters. But this was shared with me by Spectacular, and it says that 2022 will mark the end of the pandemic and a full economic recovery. And this is an interesting prediction here from JP Morgan, who most of us know their history, and I've covered it on this channel about precious metals prices manipulation, which, by the way, for the record, for those of you who have been watching this channel long enough, I make a distinction between precious metal price manipulation and price suppression. But if this comes true, and maybe they are, one of their motivations for this story could be for precious metal price suppression, using psyops or whatever, essentially making a prediction that since they're the largest bank, that they say it, that maybe it'll have a strong enough impact, and people will think, well, we'll get back to normal. Let's see what the details of this is. After 2 years of COVID-driven chaos, JP Morgan Chase is predicting that 2022 will usher in a return to normalcy and a full healing of the economic wounds caused by the health crisis. Our view is that 2022 will be the year of a full global recovery, an end to the global pandemic, and a return to normal conditions we had prior to the COVID-19 outbreak. Marco Kolanovic, JP Morgan's chief global market strategist, wrote in a note to clients on Wednesday. This is warranted by achieving broad population immunity and with the help of human ingenuity, such as new therapeutics expected to be broadly available in 2022. America's biggest bank expects progress on the health front will spark a strong recovery in the economy, marked by a return to global mobility and robust spending by consumers and businesses. JP Morgan is forecasting continued growth for the stock market, albeit at a slower pace. The bank set a year-end target of 5,050 for the S&P 500, up by 8% from current levels. In 2021, economies around the globe made great progress towards recovery and reopening, Kolanovic wrote. However, much remains to be done as the recovery was uneven, incomplete, and often interrupted by new virus outbreaks and scares. Despite vaccines, natural immunity, and health restrictions, the human toll of COVID has been greater this year than last, they admitted in a note. But it cautions that there are obstacles ahead, including the unwinding of easy money policies from central banks. As the recovery runs its course, markets will begin adjusting to tighter monetary conditions, a process that will likely inject volatility, Kolanovic wrote, adding that this shift will be a headwind for richly valued markets like the NASDAQ. Other risks identified by JP Morgan include geopolitical tensions in Europe and Asia, mainly Taiwan and Ukraine, crisis there, unwarranted around the high inflation and a looming uncertainties around high inflation and a looming energy crisis. Well, those are certainly something that should not be just afterthoughts. High inflation and obviously the energy crisis and supply chains are still a big deal. Citigroup predicted Tuesday that U.S. oil prices will average $59 a barrel, but JP Morgan thinks they will basically be around $86 a barrel at the end of 2022, which means that they're probably expecting inflation will have a large impact on that. And if we see things move in a direction, we could be heading for stagflation as well. And so there's what CNN is reporting about this, and and over here at Reuters, they say that new vaccines and therapeutics will result in a strong cyclical recovery and a global mobility and a release of pent-up demand from consumers. The thing is, we're seeing already increased consumer spending recently, mainly due to the holidays, but also because inflation is having such an effect that almost 1% of value is stripped away from the dollar every 30 days. And so people will be wise to stock up on things they need or want because they're going to be at least 1% cheaper. And that's only by some measure, by some things that this consumer price index measures. So it's quite interesting. It makes me wonder what their motivation is. Obviously, the motivation for them is to enrich themselves, which is understandable, profits, and they want to make everything happy and go lucky, as it were. And what was it? Jim Cramer said the economy is doing very, very well, and but there's reasons for increased consumer spending, as I mentioned. I think one of the biggest drivers for it is inflation. Again, you think about it, at the pace of inflation right now, that is kind of where people are at. They want to get things before the prices go up. So they're spending more money. That spending of money increases the velocity of money, which means that's probably going to just exacerbate the problem with inflation and going to continue to rise. But I think even just the fact that JP Morgan has made this prediction is covered by major news networks, Reuters and CNN here, means that this is going to drive sentiment in the general overall markets. And we know what is in part of those markets: stock market trading, ETFs, exchange traded funds, and what is gold and silver prices based off in the markets, exchange traded funds, and the sentiment there. So shifting of that sentiment could move towards other investments, especially if people take JP Morgan's prediction to heart. They will be investing in other areas, which means that gold and silver prices will fall, and they could potentially plummet. And so we'll see. Now, I'm not discounting the possibility that this could be, in fact, true to some extent, but there are so many things working against. The dollar is under threat. They are going to probably be resetting, but if we have another year of these policies, especially with the Federal Reserve, is what they're going to do to try to walk that fine line, tapering and then rate hikes, because there's talk that they may raise rates a couple of times in 2022. There are a contingency of folks that believe that's not going to happen, because if they did it, that would essentially spell the end. It would be even a quarter point increase. So that is a very tough thing to consider. What could the ramifications of that be? Because if that happens, then we might see gold and silver just potentially really shoot up as a reaction to the effects in the economy for this. But it all depends. There's a delicate balancing act here. And, if we have the velocity of money continue at its rate, and we see other issues arise, especially geopolitically, and even on the virus front, this new Omicron variant turns out is more contagious but less of an issue in terms of health effects. And then we have the Delta variant still out there. It's the perception of the outbreak of the pandemic, and it looks like in this case, JP Morgan is trying to alter that perception to their advantage and to the detriment of gold and silver prices. Nonetheless, we'll see what happens, but it's an interesting thing. It makes you question the motive. I think it's good to question the motive of these big banks, especially the largest bank, especially considering their history that we've talked about on this channel. But let me know what your thoughts are on this story. Fascinating indeed. And consider the source too, JP Morgan and CNN and Reuters. that is something that should not be discounted here. Thanks again to Spectacular for sharing this information with me, and I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.